Jerome Powell taking the podium.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months.
Well, welcome on into another episode of the Crypto Dough Show, and today we're talking about I want to give you guys an analysis on the market. As you guys know, yesterday was the meeting. We're not going to have rate cuts, which I don't understand why people would think that, but we're not going to have any rate cuts due to the economy, due to what's going on in the war. And also, we're not going to no rate cuts. And I want to talk to you guys about what do I think what the market has for us and how I stopped the buying, because what I realized is that I've been doing some chartings and I realized that it's going to at least be until October until the lows are in. Let me repeat, it's going to be until October until the lows are in. If you check out my posts, I always told you guys that, hey, it looks like a bull trap to me. Bitcoin isn't above 75K. Which means that it's going to come down some more. I projected that maybe that we will go down to at least below 40K. Maybe at the 40K mark, I will start dollar cost averaging. At the 40K mark, I will start dollar cost averaging. That's just what I'm doing. But of course, I'm going to keep you guys intact and up to date on what I'm doing. Great time to save money, build your cash pile, and then deploy when the time is not directly at the specific number, because it can go way below 40K. But at that point, I will begin to start dollar cost averaging. Let me acknowledge the chat real quick. We have Princess said, hey, how are you? I'm doing good. I've seen you in a while. How you guys doing? Watching from the Bahamas. Smash that like button, subscribe to my channel. That's all I ask. Help me get to 10,000 subs. I'm here to share everything I know with you guys, so together we can go further than Wells Fargo. Smash that like button, subscribe to the channel. Also, go check out my merch. It's going to be in the description below. Now let's continue. Let's listen to what Jerome Powell has to say about the economy. And yeah, y'all have to remember, some of these numbers are damn near fabricated. The job market's horrible. AI is taking over a certain job. Well, all jobs are affected by it if you want to make profit or learn how to use it, which they're cutting human use. So you have to learn how to pivot in this world. That's why learning skills, learn how to trade, learning crypto, learning different skill sets is the key to actually being relevant in the near future. But let's continue.
In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures.
It's more than just tariffs. Come on, people. It's more than just tariff. We are currently at about 5 to 6 different wars all at once. We're fighting over natural resources, of course. That's always the thing. Oil. To me, the world is going through a regime change. The world is going through a regime change. Leadership might change. Policies, laws may change. Crypto is definitely going through a change. We're supposed to have the Clarity Act passed a long time ago, but y'all know that didn't happen. They're saying that the Clarity Act may be passed in April, but I look at it like, is this a buy the rumor, sell the news kind of event, or sell the news, buy the rumor kind of event? The way I see it is some bullish news for the market actually crashes the market. So like I say, according to chartings, according to the 52-week moving average, Bitcoin has to come down some more in order for me to start basically buying again. Now I may nibble, get a little $100 here, $200 there, but as far as offloading my cash load, it's not time yet for that. It's not time. And the little $50, $100 that I've been buying and accumulating, most of those positions are down because I'm accumulating while these things are going up. Now, I know long term it's going to work out, but I don't want to advise, not even advise. I don't want people to copy what I'm doing and then they're losing money instead of just keeping a nice cash pile. Then you may want to pay attention to what I'm doing, and then you can slowly allocate at a certain price point. Because the way I see it is the charting, and this can be a patient game. The way I see it is the charting don't lie. The charting state that we have to go below 40K. Most people do not want to hear that. They want to hear Bitcoin is going up, it's going up, it's going up, it's going to continue to run up. Buy. No, a lot of YouTubers, even I looked at a couple of YouTubers that I followed about the subject matters. They just stopped doing video. I said, okay, they was in it for the hype, but I'm in it for the long run. I am in it for the long run. I've been here since 2019. So I've been in the space for well over 5 years. And I've seen things go up and things go down, and that's all part of it. Like, I've made money, I've lost money. I've made more than I've lost, though, of course. But that's a whole nother topic. Let's continue.
Measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East.
Right.
Most measures of longer term.
And who you guys think that's causing this oil disruption in the Middle East? Is it Iran? Is it the United States? Is it Israel? Because it seems like we're fighting a war that's maybe is not the best thing for us, or we want to engage into a war that may not be the best thing for us. Right? But leave your thoughts down below. I want to know what you think. Put a 1 in the chat if you believe that Iran started this. Put a 2 in the chat if you believe that the United States started this. Put a 3 in the chat if you believe that Israel started this. Let's continue.
Expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or.
Of course, it's subject to uncertainty. Now let's get into it. Let me go to another screen and let's see what's going on with coin market cap. Let's see what's going on with the crypto world. Coin market cap, here we go. Now, according to coin market cap, we are currently, if you guys could see that, let me make sure you can see it from you guys. Okay, cool. Put a 1 in the chat if you can see it. So Fear and Greed Index, we're at a 29. That's excellent. We were at a 5. Now, like I say, I believe the market is still going to come on down. The market still is going to come on down. My projection for the crypto world, if Bitcoin is going to go below 40K, it means altcoins is going to lose about 80%. Now, to some people, that may be not so good. To me, that's kind of good. The reason why I say it is I get to buy my favorite projects like the XRPs, the Cardano, anything. I like Cardano under 20 cents. Monero, I like my privacy coins as well. Stellar, XLM, you can't forget about that one. Hedera, I'm waiting for Hedera to go below 5 cents. Sweet spot. Kronos, I'm waiting for Kronos to go below 5 cents as well. Another sweet spot. BitTensor, Tau, that's another awesome one. I'm just running down the list and naming a few. Let me know which coins you guys like or which token you guys like. Flare is another one. Whoa. Midnight. Now, as far as my privacy choices, as far as privacy goes, I like Midnight is one of the new projects. It just came out. It's on the ADA. It's on the Cardano chain. But I like Monero as well, XMR. XMR is one of my favorite tokens as well. VeChain, you can't go wrong with that. Not financial advice. Virtuals is pretty good. I've seen Virtuals. And I'm you can't catch them all. I seen Virtuals back here at about 40. No, I seen Virtuals at about 5 cents. I've seen Virtuals at about 5 cents. Virtual went all the way up to $4.50 or 40 cents. Now we're at 70 cents. As far as their project and as far as AI goes, I think Virtual is definitely going to be a good play for this bull market that is going to begin to take off in about October, November, at the end of the year. Let's just say October, November, December. Let's just say Q4 At the end of the year, this is when I'll be loading up at the end of the year, because I think 2027 is going to be a bullish year for it. 2026 is going to be a down year, but it's also going to be the accumulation. It's also going to be the accumulation. And one thing I noticed about things is that when you're accumulating things, this is when the market gets so boring. This is when the market gets so boring, but I understand why Elon Musk has the company called the Boring Company. You have to learn how to get boring with these things, because everything is in a dopamine release. Everything is in a dopamine release. So you have to learn how to get bored with the market, because the market could trade sideways and chop sideways for days, for months, for years. Look at XRP, for example, for years. When he went through the court case, it was chopping sideways for years. Look at this. 2022. You guys see that? 2023, 2024. It chopped sideways, if you can't see, from 34 cents. And I was holding XRP in 2019. So I was holding XRP all the way down here. 19, 20 cents. I was holding XRP around this time. It went up, came back down. It was at 30 cents and chopped between 30 and 70 cents for 3 years. 2022, 2023, 2024. For 2 years straight. It chopped for 2 years straight. So saying it all to say, these are the things that can happen in the space. And this is the things that people really don't like to hear about. When the market chops, it chops. This is considered the downtime for crypto. A lot of people aren't interested in crypto, but to me, this is the best time to actually learn about crypto and also put yourself in position to accumulate, because accumulation can be very boring as well. Accumulation can be very boring as well, but this is a part of crypto. A lot of people are in it for the good, but when it gets rough, they're not in it, which that's normal human psychology. But life continues. Life continues. So I wanted to show you guys that what's going on in the market. What is going on in the market? Like I say, Bitcoin right now. Let's check out Bitcoin. Bitcoin right now is currently at 69,000. 69,000. In 24 hours, it's down 3%. So it fell, which I've been telling you guys. If Bitcoin doesn't go above 75K, it still would be considered bearish. Even if it went above and wicked above 75K, it would still be considered bearish in my world. And the reason why I say Bitcoin would be considered bearish is the charts don't lie. Bitcoin would definitely be considered bearish. Let me change the so you guys can see what's going on. Now, as far as the price point, let's go to the okay. Bitcoin took off from 30,000 and ran all the way to 125,000. I'm expecting Bitcoin to come back down to at least in between this region, between 25 and 40K. I'm expecting Bitcoin to come in between 25 and 40K. This price point right here. That's what I'm expecting. This is what I'm expecting. You got the oil situation that's going on. You have a lot of global events that's taking place as well. A lot of events that's taking place. For some reason, that screen was giving me a problem. Okay. Well, something going on with the dashboard. But anyway, so that's my outlook on this. Like I say, Bitcoin is at 69,000. We can come all the way down to at least 30 to 40K. I'll be dollar cost averaging at 40K. I'll be dollar cost averaging at 40K. So from where we're at right now, let's just say we're at 70,000. We got another 30,000 through 40,000 price point to go. On that note, smash that like button, subscribe to the channel. That's all I ask. This is another episode of the Crypto Dough Show. Put on your seatbelt. It is damn near time to take off. In 5, 4, 3, 2,